What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, where the heck is everybody? I know it's Friday morning, and I know that most of you are, I don't know, Friday mornings really aren't a very popular time anyway. But I figured that we'd talk a little Micron because tomorrow, flying up to Chicago, it's going to be cold. It's going to be much colder than Miami, let me tell you. But I don't think it's going to be too bad. It's supposed to be in the 40s for highs when I'm there. But knowing Chicago, I'm sure I'll get a nice little cold snap there that causes me to freeze. I'm sure. But as a result of being back in Chicago, Monday I have to film their Zach's Ultimate Strategy session. Tuesday we've got to do top stock picks and some other things. So I'm flat out just going to be busy when I get there. And I don't think that I'm going to have time to do any of these shows up there. So we're going to have a little bit of a pause. I'll still be checking in on the in the chat room. And that's going along the bottom of the screen here. What's up, Aaron, Mr. Wallace? How are you guys? So today we're going to cover Micron, but I'm also going to look at Adobe and Costco. And I'm going to do that Adobe Costco thing first, kicking it off. Dave's loser streak looks like continues because Costco did not care that I wasn't so bullish on it. And instead has gapped up here. Now, overnight, it looked like they were going to come under some pressure, at least immediately after the results last night. But we've got a gap up here. So let's take a look at this gap up. So huge gap. Looks like 192. Wait, low. 192. Yeah, it's the low. So, whenever you get that big gap up in the beginning, oh, there goes my Google Home. It's almost as if somebody knocked it out and now it has to readjust and find the network again. And because it's a Friday, I've got some guy, it sounds like, that's going to be cutting grass outside my window. So this is going to be a fun one today with everybody throwing wrenches into my stuff. All right, guys. Well, let's go ahead and get started now with our newly found lawnmower sound. All right. So anyway, like I was saying before I was rudely interrupted, big gap up on Costco here, up to 192. Look at the volume. Basically all just at the open. You get over 1 million shares that traded there. And now the volume's starting to dip a little bit. So I don't know that this is setting up itself to fade immediately. But it's something to keep an eye on throughout the course of the day. Now I put, not that, hang on, I got a double volume at price here. Let's get rid of this. Wanted to put a little VWAP up here. Now the VWAP is the volume weighted average price. So essentially what you end up finding throughout the course of the day is this is almost like the center when I pull up my, I'm just drawing a random thing here, right? But my volume at price, essentially what this is like a market profile sort of thing, right? And sort of the center of this where you have these big high volume nodes. If you had the average of that throughout the course of the day, that inevitably would be the VWAP, okay? And then so this graphically shows the VWAP as it changes, right? Because as more trades come in here, then this would push that way, and then this line would change, right? So traders use that as the average price of the day, and you want to buy above the VWAP, and then they're well, you want to buy on a move to the VWAP in the hopes that it bounces off, and then short a break of the VWAP, and then an opposite way, if it comes up and hits it, you want to short that too. Okay, but I like to use it after these earnings plays just to see if there's going to be a fade throughout the course of the day, or if it's just going to stand in there. So something to keep an eye on when you're looking at Costco. Then we're also going to pop in and look at Adobe. Now, one of the things I said in the video on Adobe is that these guys have a tendency to not really move all that much on the earnings report, but then they drift afterward, which prompted some responses of, hey, let's do a butterfly. And again, I don't like doing those in these videos because it's just hard. It's hard to show it, and I'm trying to keep these easy for people to for everyone to understand. So trying to show butterflies, I just don't have like an easy graphical representation, and for some people, the newer viewers, it's hard to really grasp a call spread or a put spread, right? I mean, a two-leg trade, because a lot, options are difficult. They're not the easiest topic on earth. So having like a four-legged option, and it has a little different structure than the iron condors that we tend to do. I think it just adds a layer of complication and sophistication that's hard to get across just in a live show. Okay, so there's that. Anyway, but overall, what Adobe's done, they opened up and then have retraced to the 50-day moving average here. So not a lot of movement here on Adobe. So we'll have to see if we're going to catch some post-earnings drift after. So I don't even know if making a trade on Adobe today is even necessary. You kind of wait to see until they actually start catching that post-earnings drift, which is just not happening yet. Okay. All right. So let's go back to the task at hand, which was Micron. So let's kick it off like we always do, taking a look at the price, consensus, and EPS surprise chart here on Zacks.com. And what can we say about Micron? The black line corresponds to the right y-axis, which is price. The multicolored lines represent the evolution of our Zacks consensus estimates and correspond to the left y-axis. The green arrows are earnings beats. The red arrows are earnings misses. And you can see that they haven't missed in a while. The last time they missed was back in the middle of 2015, which feels like a million years ago, the way that the market's been moving since then. One thing you'll notice about this chart that should jump out at you is the predictability almost of these trends, these earnings trends, and their impact on the stock. Now, why is that? Well, Micron, let me draw that more gangster-like. Micron. No, I just can't draw today. That's normal. That's about as normal as it's going to get. Micron, their main input here, well, not input, I guess their main output, memory and DRAM. DRAM prices are basically like commodities. You have a set, you have a supply coming from these chip makers, and then you have demand coming from the Internet of Things and laptops and whoever else that has demand for these chips. So prices tend to trend for extended periods of time and then stop and reverse and then go the opposite way. So if you looked for DRAM prices throughout the course of 2013, 2014, 2015, this is basically what you would see also. So part of the reason why I got in on Micron and home run, and I didn't catch the bottom, I'm not going to be that braggadocious, but I did catch it at 15 in home run, because you wait for the trough, and I saw the trough develop and these prices start to creep back up, and I was like, all right, let's go ahead and do it. Now, if you look at these estimates for 2017, estimates still very high. In 2018, look at the move. So it's not just have they promised high, but it's not even high enough, because as the revisions come in, they keep on creeping back to the upside. So lots of positive motion there in DRAM pricing for Micron. All right. Let's see if my Google Home works again, guys. How about this? Hey, Google, play Dean Martin.
Okay, playing Dean Martin.
What do you know? There it goes. I'm hoping that the music from Google can help drown out the schlep rock that's outside my window right now, just making noise with what sounds to be a lawnmower that's not mowing any lawn, but just idling. So if you guys hear a loud crash, a thud, what sounds like fingers breaking, and a grown man crying like a baby, it's because I broke through my back window and pummeled someone. I'm going to try not to do that, though. I'm hoping that my coffee can reel me in a little bit here, so I'm not so crabby. But Dr. Paul, you're going to have to bail me out, my friend. Okay. So, yeah, there you go. I need some elevator music. I need something to calm me down, Dr. Paul, because otherwise, I have to have this music to just ease me, just reel me in a little bit. But yeah, Dave, there are several sites, but some of them they try and make you pay. But yeah, you can see NAND prices and DRAM prices and all sorts of stuff. Okay. So overall, what are we going to glean from this price consensus and EPS surprise chart? Good stuff. But what we need to figure out is how much good stuff is there left in the tank, right? How long is this going to happen? Or is this running out of gas here? Unlike the lawnmower that's outside my window making noise, I don't think it's going to run out of gas. All right. Let's look at the detailed estimates page here. Zacks ranked number 3, hold. Look at the style scores. They're loving the style over there. A's across the board. Now, they're going to report after the bell on the 19th, so that's next Tuesday. So you got the rest of the day today. Figure out if you want to mess around with it. And then you got next week, Monday and Tuesday. So you got plenty of time to figure out if this is something that you want to play with. Now, okay, so we're still good. Look at revenues for the current quarter. They're predicting 60% revenue growth for the current quarter. Dave, we did talk about them a little bit. We're gonna circle back at the end of the show. Next quarter, 30.81% sales growth here. So overall, the current year looks like 2058. But then the next year, here's the problem. So it's not showing up yet, which is a good thing. But eventually it will. So yeah, Dave, if you're looking at that put spread that I was talking about, I think that goose is cooked, and you just take the L like immediately. Let's look at the EPS here. Current quarter EPS, 585% EPS growth for the current quarter. Next quarter looks like 116%. Current year numbers look like 54, but look at next year. That's contraction in EPS. So I'm not going to call MU a ticking time bomb, but it doesn't look good, right? As this is going to slow. Now, I do remember a few quarters back, NVIDIA actually started to have a profile like this, but they found ways to innovate and find new revenue streams and such. But when it comes to Micron, I don't know that they're being so creative when it comes to these revenue streams. That's part of the reason why the stock tends to just move up and down with these earnings reports. If we look at the last 60 days, you have two analysts that have increased their earnings estimates for the current quarter. One has done so for next quarter, two for the current year, and one for next year. So very mild bullishness out of analysts when it comes to Micron, and it's been a while. However, look at the impact. 90 days ago, we're looking for $1.73. Now we're looking at $2.20 next quarter, 142 to 195. Current year number from 611 all the way up to 767. Next year number from 477 down to 597. This is a drop off, falling off a cliff. But look at when this fiscal year ends. August 2018. That's a strange end of the fiscal year, but that tells me that we're just getting started here. So I think for now we're still going to be focused on this current year, current quarter, next. I think that's where our focus is going to be. But eventually, the market's going to shift towards next year's numbers, and that's when you're going to have some problems, I think. Not necessarily, Micron dropping like a rock or anything like that, but certainly making it tough to continue on the pace that it's been on. But perhaps that's what we've already seen, because look at this. Almost near 50 into the end of November, and then since then it's come crashing down, really. I mean, that's a pretty healthy retrace there from 49 to 40. And then now here it sits at 42, which is basically where the stock was trading back in October. So maybe it got a little too overbought here. Reeled it in a little bit. If you're looking at my commodity channel index here, though, you shouldn't like what you see. Got overbought into the 52-week high. Crossed down through the zero line, which is a sell signal. That also pushed the stock underneath the 50-day. Oversold CCI, crept up back to the zero line as the stock came to the 50-day, and now has come under pressure. So from a technical perspective, none of this is nice. Look at the volume start to dip off too. This is no bueno. One thing I want to look at, my friends, look at the money flows. Money flows dipping down in the negative territory also. Lots of negativity here from a technical perspective, okay? Now that's not necessarily the death knell here, but it's not exactly a feather in the cap of Micron. Let's look at my G14 classified stuff. Revenues. So when is this revenue actually going to slow? It's not this quarter. That last quarter of this year, so the August quarter, is really when it's going to slow. You could argue that it slows this quarter too, though. Now remember, Micron is going to be giving guidance for the rest of the year. Guidance should still be okay. This quarter is going to be fantastic. It's just this stuff out here that you got to worry about a little bit. But based on the price and consensus and EPS surprise chart, you know that Micron kind of starts low and inches higher a little bit. Let's look at the EPS side of things. So, all over the place with this madness, right? And that's a function of them just being tied to these DRAM prices. So, I think that's part of the reason why you got these numbers out in 2019 aren't so great. They're basically expecting this DRAM pricing to level off and even dip. So that's what this is all about. This quarter is still going to be okay. Next quarter, Let's look at some valuations here. forward 12 PE on Micron. We're going to compare it to not the market, because I don't care what the market does. And yes, you're going to have some of this ignorance. To the rest of the industry. And look at how this is tracked with the industry. Basically since 2013. Oh, good news, guys. You're not going to hear any bones break today because the guy finally turned off whatever he was doing over there. Good. Whew, I was worried about that. Okay. All right. Now let's look at the price to sales. They're in line with the rest of the market. So really, it seems the only thing we should be worried about is those DRAM prices. And again, they track with the rest of the market here too. But I'm worried that there is no other stock in their Zacks industry group here, though. You see what I mean? When I see it that close, I'm like, maybe they're the only one in their group. So, just gonna look at the. You can easily see if you just go to the quote overview on Zacks. Then you can go down and look at the Zacks industry rank, and it will show you a few of the other holdings that are in it. Yeah, see, I figured. So this is absolutely useless. So, do you see what I'm saying, guys? You can only get, if you got one other. Look at this. I mean, this company doesn't even really exist. Whenever you see anything following that close, there's usually a reason for it. So, all right. So I'm not so worried about the comp. Let me go back to this real quick, though. So the important part here is that Micron only trades at 5.8 times next year's earnings, which is absurdly low when you're talking about a semiconductor company. Really, I mean, it's a tech company. But it never really has traded where the market traded. In the middle of 2016, it did a little bit, but really historically, this is sort of where it trades. I think that the risk associated with DRAM pricing probably has a little something to do with that. We're getting old school here, Trevor. I mean, I got like Dean Martin, Bing Crosby, Frank Sinatra. I think there's a lot of Dean, though, going on here behind me. So, yeah, it's really cheap at 5 times earnings. And now, let me go back to the sales, give us some perspective. I know I'm bouncing around a little bit, but trade only at about 2 times sales. And look at this, too. 2013 into 2014. That's when it started trading along with the S&P. There's been a couple of periods. It seems that whenever Micron starts to trade up where the market is in terms of price to sales, you got to watch out. And I think maybe that's what happened. Part of what happened caused this sell-off recently. Just got a little too close for comfort. So here we are now, much lower on Micron. Okay. Let's pull up the detailed estimates page, or the consolidated surprise page, rather. Dr. Paul is just allergic to Christmas music, I guess. You know, I know you live in Miami and all, but it can't be Tiesto 24/7, Dr. Paul. I mean, 9 a.m. is or 10 a.m. I guess 10:30 in Miami, 10:24 is too early for glitter Versace shirts, gold chains, and Tiesto. It's just too early, bro. I know what you're thinking. It's never too early for Tiesto and Versace shirts and glitter, but it is. All right, so what's happened recently? Looking at Micron, 6.37% last quarter to the upside, -7. You got a 9, a 12. So this bad boy likes to move and has been moving recently. So you can bet that we're gonna catch, some moves here. Oh yeah, that's right. In Singapore, it's Friday night. Wow, David, that's I don't know whether to be proud or to be concerned that you're spending your Friday night listening to me. This I guess it's pretty cool. I do love that we have this international flair here to Live Trader, which is pretty sweet. I know we've got Bruno's in Portugal, and he's probably not here right now. And then obviously, Dave, you're in Singapore, right? I think you're still in Singapore. And then of course we've got Dr. Paul down the street here. There's some Canadians, right? Trevor, aren't you in Canada? That's what we should see is where we need like a map to see where all the people are from, you know. Okay. Bordeaux. Where are you from, Bordeaux? Are you from Bordeaux? That's what we need to have. Everyone should just say broadly where they're from. Not, don't get all like, hey, I'm right around the corner. I'm at 1247 Westchester Street in Pickleberry, Idaho. We don't need all that. It's like, what country are you in? That would be nice to know. Okay. I got it. Virginia, huh? Bucharest! Yo, that's awesome. Bucharest. Man, that's cool. Well, welcome. Lots of snow, huh? Hey, it's nice here, but it's about to be cold in Chicago, but I can handle it, I'm still insulated. Tracy, you're in Mexico? Oh, nice. Los Angeles, Omaha. Wow, cool. Oh, that's pretty cool. I didn't know we had such international flavor. I got hey, Aaron, we got a guy who used to work with me over at Zach's. Yeah, we'll talk real quick LRCX towards the end here. We gotta finish up this Micron first, but yeah, we'll touch on that. Aaron, I was gonna say, a buddy of mine who used to work at Zach's here, moved back to his hometown is Omaha. You don't want to go to Chicago in this time of year, Dr. Paul. It's not worth it. It's not worth it. All right. Obviously, we're not going to look at this front week because that expires today. Let's do the side-by-side view here. $42, where was it at? $42.20? Is that where the stock's trading? No, not at TD Ameritrade. There's a car dealer out there called, I think it's like Sonny Gerber's Used Cars or whatever. That's his family business. The Gerbs. We missed the Gerbs. We missed the Gerbs over at Zach's. I'll have to send them this. Wait. This can't be right. Is this right? Hang on. Sometimes something doesn't quite look right. There we go. All right, 42s. I don't know, Dr. Paul. This is too, man, it's too cold. You like the cold? I don't know. 42 calls going 202 by 208. Let's call that 205. At the money put 169 by 174. Let's call that a $1.72. You're looking for 377 on $42 holler. Almost 9% is the move they're expecting here out of Micron, and they get it almost every single time. All right, so let's look. Side by side to the stacked. Sorry, guys. Sitting here clearing my throat over here. Oh, nice. I'll have to, I'll have to introduce you to Ben so that you get the hookup. All right, so Jan 19th. So this is the January expiration. That feels like it's way far out. Don't we want a Christmas miracle? Don't we want a Festivus for the rest of us? Let's mess around with this December 29th expiration. Just because, right? Just to infuriate the people who give me emails saying I should never do live trader and it's a disservice to life and I'm a terrible person for encouraging this kind of reckless behavior. We're going to do some recklessness here because I can. Back to the chart though real quick. Like look at this floor. 3907. And then this top is 49. So 3907 is really the bottom here. 3907. Okay, so let's look at 39s. On the bearish side. We're definitely going to look at both this time, okay? I'm going to give you a bull and a bear for sure because I don't really know what's going to happen here, guys. And gals. But it's cheap to play. Relatively cheap to play. So let's say you went long the 42.50 put. That's going to cost you 217. Simultaneously selling the 39 put. You're going to get back 82 of those cents. So the net outlay here is only 135. Difference in the strike prices is 350 minus that 135 means you can make 215 on a $1.35 or 160%. But you would need Micron to trade at or below 39 at earnings. Now look at this. Let's do the creep. Let's creep it in. What if we did this? What do you think this 42.40? I don't even think this is going to price out even that much better, really. Let's stay at this 42.50. You see, as tempting as it is to start buying these out of the money puts and stuff, right? Because you figure, oh, it's that much cheaper, right? And you start creeping down. When you're in here at 42.50 and the deeper in the money that you end up getting, what ends up happening is there's a little less implied volatility. You guys see that? As the intrinsic value starts to creep in here. So you're paying for actual intrinsic value versus paying for implied volatility in time, right? So having the at the money as your anchor, especially when you're just like 30 cents in the money, affords you a few advantages. So one, the stock doesn't have to move as much for you to be in the green. You're going to see the break even is not that crazy here. Um, and again, we don't have to go all the way out to 39. You know, I'm a fan of the halvesy, right? I've done this several times. Look at the 40-50. And this is what you want to do when you're trying to size this up. Just look at a couple of them and start playing with them. So 217 is the 42.50. The 40.50 put, if you sell that, you're going to get back 124. So here the net outlay is only 93 cents. Now the difference in the strike prices is $2 minus that 193 is 107. So you're not going to make as much money on this. But you can still double up. And all you need is Micron to close at or below 40.5. Maybe we don't want to do that one. Let's look at the... Oh, look at my erasing skills. Ah! Bar chart. You and your refresh. Threw us all off. It was so good looking there. Alright. Let's get back. 42, 50. What if we went to 40? $42.50 costs $217. The 40, $109. So here 108. Difference in strike prices is $250. So you can make $142 on that 108 or 131%. And you don't have to worry about that support level there at 39. So let's say that the bear debit is long December, what is this, 29th? So you have a happy new year. 42.50 40 put spread for 108 net debit. And we're going to give this 4-star risk, which means a lot of risk, okay? On the call side, and Dave's been pointing out that there's a whole lot of activity on this call side. I don't know which chain you were looking in, Dave. But I'm assuming you were probably in just that front week. Now, 377 is basically what the market was looking at. So that puts us around this $46 level, which I don't think is all that unreasonable when you're looking at the stock that's moved this much. But again, you could do the... remember, I like doing these just half moves. Because look at what... Watch this. Do I really need to make this circle this big? It doesn't need to be that big. There we go. 42 call is going to cost $218. So first I'm going to show you if you sold the 44 call, you're going to get back $134. So 84 is the net outlay. Difference in the strike price is $2 minus that 84 means you make $1.16 on 84 or 138% potentially. Now what if you went all the way out to here, right? Certainly there's got to be some kind of benefit to that. Well, let's see. So $218 is what that $42 call is still going to cost you. If you sell the 46 call, you're going to get back 70 of those cents. So that's $1.48. Difference in the strike prices in this case is $4 minus that 148 means you make it $242 on 148 or 170%. Now here's the nice little visual I like to do for everybody. So that means from here to here you can make 130%, and if you get this extra $2, you get another 40%. Right? I mean, that's pretty much what it is. And for doing so, for the opportunity of making an extra 40% past 44, what you're also doing is dropping your break even by a little bit. Not a huge amount, but a little bit. You're dropping the break even by the difference between these two. So another 63 cents you're dropping your break even, or increasing your break even rather. It's not worth it. So I think bulls, you could just do this 42.44. So bull debit, long December 29th, 42.44 call spread for I think it was 84 cents. Yeah, 84 cents net debit, which is relatively inexpensive and fun to play, right? Now, what do I think the trade that pays is going to be? Huh? What do I think the trade that pays is going to be? Well, what if so we're basically looking 44 to the upside and like 40 to the downside. This is a pretty tight range that we're actually expecting to see out of Micron. A bullish report, you got to think, can start to get it closer to this 50 range, right? And I just don't know if you're going to get a very bearish report. There could be some bears to it. Here's a curveball. I don't think the Micron is going to move all that much on this earnings report. I just don't. I think this is going to be one of the times where it doesn't wow us. It doesn't wow us. You'll get a beat. Yeah, it's all about that guidance. But I don't think it moves much on the report. I think it's going to underwhelm on the report. In either way, right? But look at what's already happened. You already got a little bit of bearishness priced in, right? So the caution is already there. So it's not like the guidance is going to come and nobody saw it coming and the stock plummets. I don't know if you get that. The other thing is, what are they going to tell us in the report that's going to overturn all of the worries that you had that caused the stock to sell off to here? I don't think that's going to happen either. So I think we get some, I think it gets boring, which means you can do one more thing. What does the condor look like on this? If we go, where are we at? 42.50, basically. Of course, this isn't loading up properly. Give me a second. Look at the 40. $40.39. And then we're not going to be able to get all this on the same page. Go back to the stack. Sorry, guys. I'm just trying to put this all on one page, and I couldn't get it on one page. So first, looking at going short, the 40.39. Remember the other day when we looked at Lulu and we did something super crazy where we were like very close to the stock price? Like a 41.40. That's not enough. Maybe it is enough. So essentially what I'm looking at with this is a part of me just wants to put a strangle on these guys because I just don't think that they move that much on this earnings report. So I'm tempted to just say, yo, you sell this at the money put and sell this at the money call and just squeeze the juice out of this thing because it's really not going to move all that much. But the reason why I like the Condor is because it goes out a little bit and you can win on both um, and feel like a champion. But if we were to short the 42.50 and buy ourselves some protection way out here, it's still kind of expensive to buy this protection out there. It's like the skew of this, right? It's got a long tail on either end. It still costs you a few bucks to get anywhere out here. See what I mean, guys? Guys and gals, buddy. And looking at the 40.39s, we're just not getting. Look. So if you sold the $40 put, you're going to get 109. Come on, buddy. 109. Simultaneously buying the 39 put. Subtract the 82 cents. So 27 cents is the net credit on that leg. And then the problem here for me is now you got to come out and find, because there's not a clear support or resistance level. So here I've got nice support close to that $40 level, so I'm kind of comfortable selling stuff out here. But to the upside, would you call that resistance? I just wouldn't. I'm worried that this thing could leak out to the upside if it goes to the upside. So that's why I'm hemming and hawing about this this Condor right now. And if you're hemming and hawing when you're putting it together, you're going to be the most confident in this trade when you're trying to put something together and figure it out. So if you're not confident about it when you're putting it together, don't do it because it's going to blow up in your face, like guaranteed. Okay? So I'm just not comfortable with it right now. So, no. It's tricky. It's tricky. I think you can make some money selling some call spread, some put spreads rather out of the money here because of that support level. Fairly confident in that. I don't think it's going to move much on earnings, and it may catch a little bit of drift. So I don't know. I think I'm officially going to say the trade that pays is the bull debit. And because if you look at that bull debit, it's not much of a move. And what you should do, though, is wait until Tuesday to see where the stock is trading and adjust these strikes accordingly. And keep it tight. Like that 42.44, right? It's not a huge move to the upside because I don't think it has a huge move. But getting back to 44, which would be over that 50-day moving average, I think if the guidance is decent, which it should be, it can get back up over that level. And we've seen this with Micron before. And even if it gaps down, I wouldn't freak out because it does have this tendency where it moves on earnings and then gives it back, right? It's like it fades it. Doesn't happen all the time. It's pretty hit or miss when it comes to Micron. It's kind of all over the place. Look at this nice little fib here. Look at that. Yeah, upside lotto for sure. Let's look at this. And remember, Aaron, when you're looking at these lottos, don't buy it today. You buy it the day of the earnings report in the afternoon. So you got to think, great report, it breaks 45. Right? So that's where you should be looking, out by 45s. That's still going to cost you 80. Now here's the thing. 45s cost you 80, and our bull debit only was 84 cents. Granted, the upside of the bull debit is much less, potentially, but this is more expensive than I thought it was going to be going out here. But this is where you would have to go. You'd have to go all the way out there somewhere. It's because of the way that skew is. I was talking about that earlier. It's like you still have to pay all the way out here, and all the way out here on these trades. It's just not there. Yeah, trade that pays is basically the lotto. So I guess that's where I would be looking, but it's, again, do you want to pay $80 for something when you can pay $80 here? The risk is the same. The payoff is different, basically. Risk is more here, obviously, but your hard dollar amount's pretty much the same. And then even to the downside, my mark is I'm always looking for 40s. Like, where's the 40 cents? But look at this implied volatility here. Of course, you're going to see that. Huge numbers, but in the 80s. And look at this is accelerating down here, and it's just anyway. All right, where did Bourdais go? Who else asked me about lamb the other day? We were in the chat room and somebody was it wasn't you, Aaron, was it? Was asking me about lamb. This looks awful familiar. Was that the AMD report or the Morgan Stanley report? There was a Morgan Stanley report, I think, that sunk a lot of these chip stocks. And so what could happen here, though? It is sad. But potentially what you have here is an overreaction to an industry-wide report. Yeah, it was you. And if Micron has a good report, then I bet you Lamb is going to tick up a little bit. So that's what I'm seeing there. When do they report? Let me look up LRCX really quick. I had these guys in momentum, right? I think I had a momentum. January 24th. So you got a little ways before these guys hit. Oracle. Oof, woof. They reported last night, right? Gap down. Look at this. Potential for a fade, my friends. When I say fade, for some reason, I guess, I don't know, maybe I'm silly and I say it wrong. But when I say fade, I basically just mean whatever the move was, do the opposite of it. So fading a downside move would mean I'm expecting it to go up. Fading upside move, I'm expecting it to go down, right? So here we're back above the VWAP. Might not be a bad idea to peck at this. And if it gets back into this gap, this could be a good day, right? You could recover some. But again, it's a day trade. You got to keep an eye on it. This is kind of a snap judgment. I haven't, David, I haven't read the report yet. So I don't know about the long run, but this doesn't look like a bad little setup. Yeah, Wild Bill, we were talking about that. Extraordinarily low PE. Perhaps. Now, you know what? I bet this chops around this level. This is just going to chop around the VWAP. I think this is going to chop around the VWAP. Look at this. Once, twice, 3 times. I think they're fading Adobe today. At least for the day, it looks like they're selling into these rallies, right? Rally on the open, they sold it. Second rally, they sold it. We're not out of gas yet, but let's see what happens if this approaches a VWAP if they sell it again. Then I would wait. Dr. Paul, the way I would play that is I would wait until the end of the day and then get in the bullish direction. Because remember we were talking about that where Adobe, it's like, doesn't really move on earnings, but then it catches a little bit of drift. So there you go. I think that's the way to play this Adobe. Just dumped it. Be good to keep an eye on this. So to conclude, sell at 10% loss? No, wait! No! LRCX? No, wait. Definitely wait. Yeah, definitely wait. You've already been through the worst. The worst is the overreaction to the Morgan Stanley report. So you've already stomached the worst of it. Let me see if I can get you some more peace of mind. I mean, just look at the longer term chart on this. And Bourdain, I do it here on the earnings videos, but this is what we should do here. This should make you feel a little bit better, Bourdain. Earnings trends take a long time to develop, and they don't reverse on a dime, as opposed to price, which is like a fickle woman or a fickle man that will just like change on a dime and decide that they're not messing with you anymore and just boom, go somewhere else. Okay? These earnings stick around, right? So when you see these trends to the upside, doesn't matter, especially what Morgan Stanley has to say about something. Remember, these companies are in the business of selling investments. So whatever they were trying to sell that day, they had to say something, and this was the result, okay? You know who's notorious for stuff like this is Goldman. Fading the big Goldman report, whatever they say, is always a good idea. It's like watching CNBC, and CNBC comes out and says something, and inevitably, the second after they say it, the complete opposite happens, right? So these big reports come out. It doesn't matter if it's from Morgan or Goldman or whoever. Markets have a tendency to overreact, and then it presents an opportunity. So, speaking of, all right, folks. I think this is the last I'm going to see you guys until after the Christmas holiday. But I will be in the chat room. So I'll be in Chicago tomorrow. All next week I'll probably be elbow deep and stuff. I won't be able to do any videos. But I help my mom do some car shopping. I'm excited about that. I'm a big fan of car shopping. Doesn't matter what it's for. We're looking at a Mazda CX-3. That's right. That's what's happened in life. I'm looking at Mazda CX-3s. But it's okay. It's for mom, you know? So, we're going to do that. And then, what else are we going to do? I've got the Zach's Ultimate Strategy session and some other stuff. So I'll be busy. But I will be in the chat room. So thank you guys so much. It's been a fantastic year. I'm hoping that next year will be. Oh wait, I can't be saying the year-end stuff because I'll be back on the 26th, right? Okay, so let's stop with the year-end stuff. But I will see you all after the holidays. So have a wonderful holiday, whatever your holiday might be. Um, I know it's Hanukkah already right now, so happy Hanukkah. Um, what else? Kwanzaa. What else do we have? That's all I know right now. Dr. Paul, you've lost your mind. I don't know why you want the radical weather. It's not that fun. It's really not. And that's all I got. So I'll be gone for a week, and that's it. So thank you guys so much for hanging out with me here today on Zach's Live Trader. Have a fantastic weekend, a wonderful week next week, and I will see you all after Christmas. Have a good one.